not only could you make profit on futures when the price of a crypto is dropping, just like what you are seeing on my screen now, you could actually make this with little capital but huge gain. This is what we call leverage trading. In this tutorial, I will teach you everything you need to know about Binance future trading, how to open a long and short trade, how to set a stop loss and take profit, how to partially close a trade, or how to take a trade based on signal, and then how to avoid liquidation using the hedge mode. So let's begin. First of all, we are under the home page. Click on futures. So now, before I could teach you how to trade on Binance futures, there are certain features here I would need to teach you before you could understand what you are doing. Let's start with the USDM/CoinM futures. What is the main difference between these two things? Before you understand what is USDM and CoinM futures, you have to understand what we call margin. So on Binance future or any crypto future, margin trading means borrowing more money to trade more crypto than you can actually own. So a margin account is an account you open with an exchange that allows you to be able to borrow huge amount of money without even having that amount. Do you get my point? For example, okay, let me use $10, and you want to buy a crypto worth of $100. Here now, you need at least $90 to add to your $10. To do that, you need to use what we call leverage on this margin, which is this stuff here. For example, this is 4x. If I increase this to 10 now, if I should increase this to 10, it means I can now borrow 10 times of my capital. That is what leverage is all about under the margin. Before I will explain this leverage further, let me now go back to the USDM futures versus CoinM futures. So the major difference between USDM and CoinM futures is that USDM is settled in stable coins. Under the USDM margin, your profit and loss will be settled using the stable coin. For example, what you're seeing on my screen, this $88 here is the profit the person made and is settled in USDT, whereas this loss is the loss the person made and is settled in USDT. But under the CoinM futures, for example, let's say you are trading BTC, you have BTC and you want to trade with BTC. That means you move your BTC to this CoinM future side. The problem is your profit and loss will be settled in BTC. Let's say you make $50 in BTC and then BTC drops. That your $50 will drop. So that is why we use USDM futures, which is for stable coin, be it BUSDT, BUSDT, BUSDC. Your profit or your loss will never change. If you make $50, that means you are making $50, and that $50 will be there forever until you withdraw it out. Next, I will now be showing you guys how to switch between different coins. When it comes to you in futures, we don't just trade BTC. For example, I'm under BTC. There are other coins you could trade. To do that, click on this BTC USDT here. It will now take you to all the different cryptos we have. These are the different cryptos. And today, it's not bullish actually. Today is bearish. Today is super bearish. Now, these are the different cryptos we have. And then, if you want to sort this crypto based on top performer to the last least performer, click on this change here, 24 hours change. Click on the lower portion, this lower action. You will see that currently Keygen USDT is performing better. If you click on it, it will take you to their trade. Now another thing I have to explain here is the Perpetual. Currently you see something like PERP, P-E-R-P here. It's called Perpetual. There are other contracts we sign when we trade on future. There's what we call quarterly and there's what we call Perpetual. The major difference between quarterly and perpetual is that quarterly contracts are settled when the date reaches, but perpetual here you can hold this trade for more than 50,000 years and it will not be closed. Pay attention, especially to BTC. BTC is what has this quarterly always. We have different types of BTC here. We have BTC perpetual and BTC quarterly here. The QRTLY here stands for BTC quarterly. Let me give you an example. This one has a value of 1226. The 12 here stands for the month. 1226 here means this coin, even if you are making profit or loss, will automatically be closed on the 26th of December. So never ever trade BTC quarterly if you are going to hold this coin for so long. So always go for BTC perpetual, this one, BTC perpetual. Now, since we are doing a practical, I won't be using BTC perpetual. I would like to use a coin that could reach what we want to do. Most of the times, many people can't afford to buy BTC anymore, and the charges under BTC is very high. So now I'll be using the top gainer of today, which is Keygen. Now let me explain something. Okay, we have the leverage here, which is 20x. This leverage here means the amount the exchange is willing to borrow you. 1x means they are willing to borrow you nothing. 2x means they are willing to borrow you twice of your capital. 20x here means I can buy a coin worth 20 times of my capital. 50x here means I can buy a coin worth 50 times of my capital. Okay. Now, I currently don't have anything under the balance. This is AVBL here stands for available balance. To add fund to my Binance, there are two ways to do it. The first one is to click on this arrow here. It will now take you to your wallet. Since I'm trading with USDM M futures and what I have here is USDT, I'll click on this coin and select USDT, and then you could enter any amount. Currently, you see that my available balance is 20 USDT, but let's say I want to trade with 10 USDT only. You could enter 10 and click on confirm transfer. But since we are doing this lecture, all I have to do is click on maximum because I'll be using it for the lecture. Now, I've already added this to my account. If you see, when it got to my account, it entered as 19.99 USDT instead of $20 USDT. That 0.09 that 0.01 that is missing is what we call the funding fee, meaning we are using it to maintain the perpetual contract. That is the little fee Binance charges you. Don't relax. If you want to transfer this out now, you'll be shocked that when I'm about to transfer this out from this place, I'll still be able to transfer the 20 USDT. They will not take it from you unless you enter a trade. So forget about it. So if you want to transfer out, just click on this arrow 2 again and then switch this icon here from spot wallet to USDT. Now you'll be switching it from USDT to spot. That means you are trying to transfer the money out of that margin account now to your spot account. Then let's quickly go over some of the basics. When we buy crypto, there are different things we use in buying crypto, or we call them order. There are different orders we use in buying crypto. Click on this limit, and then now you could see we have what we call the limit order, the post only, the market, the stop limit, the stop market, the conditional, the trailing stop, the TWAP, and the scared order. Among all these stuffs here, the most important order that every day-to-day trader uses is what we call the limit order, the market order, and the scared order. Sometimes we use the stop limit order or stop market or stop loss. But those ones, we already have an application that could help you do. So those most of the times you won't need those ones. Here now, the limit order lets you buy a certain crypto at a certain price. So click on the limit order. Then the market order lets you buy that crypto at the best market price. For example, now this coin at KGen USDT, the 0.239859. Now, if I am about to buy this crypto, it will be bought at 0.24 cents, which is the current market price. But under the limit order, you are given what we call the price. The price here is at what amount you want to buy this certain crypto. Do you get my point? Do a little bit analysis. To do your analysis, click on this chart icon here, this candlestick icon here. It will now take you to the chart icon. Look at under the weekly there. This coin looks like it's dumping. It's a new coin. Under the daily, we are rising. Okay, interesting. Under the 1 hour time frame, you see the lowest this coin went to was 0.110. Let's say you don't have confidence with this coin, that you believe that this coin will still drop to 0.2074. Now, click on this icon here, this one, to go back to the buy section. Remember what we copied was 0.207. Let's use that. Under this place now, this price, that is where I will enter that 0.207. Amount here tells us how much of this keg we want to buy. Most of the time, since I'm under 50x, let me now explain this leverage easier. Since I'm under 50x leverage, with my $20, I can now buy 4,829 KGen. That is what the max here means. 4,800. Remember, the more of this crypto you buy, the more profit you would make, but the more loss you would make easily. So let's do a little practical with this leverage. If you now slide this stuff here, let's say I slide it to 1x. Pay attention to my maximum purchase power. If you look now, I can only buy 96 KGen. If I move this now to 2x, meaning clicking on this positive icon here to move it to 2x. If I move it to 2x, by either you could adjust the leverage by moving these stuffs here, or you could type the number in and then click on confirm. You see now, instead of 96 KGen, now I could afford to buy 193 KGen. Means my capital has been doubled twice. Same, if you now drag this stuff to 10, instead of 96, our capital, if you drag this stuff to 11, instead of 96, you could see now we are able to buy 1000k gen. That is the work of leverage. Pay attention to this, irrespective of the fact that, let me give you an example, irrespective of the fact that I could adjust this leverage to 150x, it doesn't mean I must buy all these 50x. That is where the amount comes in. Even though I have adjusted the leverage to 50x, the amount here will not be filled automatically, because sometimes you might want to use, okay, remember our one this thing could buy us 96, our 1x could buy us 96 this. I might want to just buy 50 of this. Once I click on buy long here now, it will show me something like this, and I will say click on confirm. It will place a 50. This is the order, we call this the open order, the order that is yet to be filled. That is what we call an open order. So here now, if you look, this 50 KGN is yet to be filled. To cancel this stuff now, because I'm still doing tutorial, all you have to do is click on cancel. Now, let me show you this example using the normal options we have here. I'm under 50x leverage, as you could see here. And then let's use the current price, which is 23,303. No, let me go down a little bit. Okay, let's leave it here. With 50x leverage now, when I click on 100% of this stuff here, meaning I'm about to buy 41,000 of this call. If I click on open long, you could see that my long position and my short position doesn't have the same value. If I click on open long here, you could see there's something they told me. My estimated liquidation price is here. Is when the price drops to 24,191. That is when I'll be liquidated, and the price gap currently from the value I want to buy is negative 128. Focus on this liquidation price, because I'm using 100% of this 50x leverage, and I'm buying 4,000 pieces of this stock at 447. Now if I click on open long here, it's going to go towards the open order position. Let's wait for it to fill. The market has to come down to, since this stuff is wasting our time, we could now use what we call the market order to buy this stuff. The problem with the market order is that, look, the current price is now 24,538. But when we use the market order to buy this stuff, it's going to buy at a price higher than this current market price. Let's click on buy now. You'll see. Let me wait for this thing to drop a little bit, at least to 240 something. And you see, as the price drops, the more of a crypto we could buy. Now when I click on buy now, good, going to say insufficient margin, and then you click on buy again, because there was when you see insufficient margin like this, you just open the buy, because the price is frustrating a little bit. You move this to 99. Once you move it to 99 and click on buy, you should stop writing insufficient margin already. Here I could buy 3,004 of this crypto, but let's choose everything success. Now this is our open trade, and this is our liquidation. You see, I had a future margin call now. Could you see how much loss I'm making? And this is what a liquidation looks like under the crypto. I'm still making this crypto, and I'm already liquidated. That is what liquidation is all about in the crypto space. For people that doesn't know, once you buy 50x and then you got everything using that 50x, the chances of you getting liquidated is very fast. Now, what does liquidation means? Using this now, for example, I just took a trade, and you saw there's no trade in front of me anymore. I didn't close it. And if you come back to my homepage, this $20 that was here is gone. When we try to refresh, this 20% here, it's gone. That is what we call liquidation. The reason here is because, let me explain this. Pay attention to this. The reason I got liquidated now is because the amount, the 50x leverage here, I went and slided this to 100%, meaning exposing me to huge volatility, huge risks, and huge chances of being liquidated. Liquidation, let me now explain liquidation after this. Liquidation is the point at which you no longer have your capital left. So in the crypto trading, liquidation means your trade or position got automatically closed because you do not, or you have lost too much money. Here now, that $20 I had and we transferred to this account, I lost it, everything. That means automatically Binance will close the trade. This is why you get liquidated. The reason you get liquidated is, even though Binance borrowed you money by what we call margin, they will not allow you to lose more than the amount you have as your collateral. Here my collateral is $20. Do you get my point? And the reason why I got liquidated is because I used a high leverage and high amount, not just the leverage, high amount. I'm going to transfer $20 back into this account now. So now I already deposited money into my account. So remember what I told you. Liquidation means your trading position getting automatically closed because you have lost more than how much you had in that margin. For example, remember I had $20 in this margin. There are many ways to avoid liquidation. The first one is what you call hedge mode. The second one is what we call isolate mode. Okay, let's start with isolate versus cross margin. Before I go further, let me explain something. The reason I got liquidated here is because one, I used a huge leverage. If you have forgotten what leverage is, leverage means how much of your capital an exchange could borrow here. Here, Binance was borrowing me 50 times of my capital. It means small move will give me huge profits. The same small move will cause liquidation. And then the major issue is not even the leverage. The major issue is because I slided this button to 100%. 100% means you'll be buying all of that amount that has been multiplied. Automatically, Binance will not tell you to open that huge amount. Let's go back and cash in again. $20 now. Let me show you how to avoid that error. Same $20 we used area. Now, if I slide this to, this is the same key gen. If I slide this to 100%, you see I could be able to buy 3,000. If the price drops lower, the amount I could buy will increase. If the price increases, the amount of this coin I will buy would decrease. And then the liquidation price would also kind of change. You get my point? Now, if I go to 50%, you could see this is the amount I could buy, and this is my liquidation price. The maximum amount of this coin I could buy currently is 4,000 pieces of it with the current market price, and then it will cost me 9.9 USDT. And then because I'm under 50%, if I go to 1%, the maximum amount of this crypto I could buy now is 42k gen. If the crypto is dropping, the more I could buy 42k gen. And then if I move this leverage to 1x leverage, for example, and slide this button here, the amount to 100%, I will never have a liquidation. Let's start with that. Let's click on open using the market order. The market order is not good to be. I don't like using market order to open my trades because it gives what we call deviation. So I'll be using the limit order, and then the amount I'll be entering here is the lowest amount at which I want to buy, and then I'll click on to see to give me 86k, and I'll click on confirm. At this price now, look, I don't have any liquidation price. Even if this coin goes to zero, I will not be liquidated. The next thing you could do here is, this is only applicable to 1x leverage. You could see I'm under what we call cross 1x leverage. Currently, I've lost $41. Currently I've lost 0.41 cents. That is my loss. The amount of this crypto I bought is 86k gen. The margin here is how much I needed to open this account, which is 19.63 USDT. The entry price here is when I bought this crypto, which is at 0.23149. And then the mark price here is the current market price of this crypto, which is at 0.228. So if you see 0.23 and 0.22 are not the same. And then one thing I forgot to explain is that when you click on buy long, it means you're expecting the crypto to go up. When you click on sell short, it means you're expecting the crypto to drop. Let me show you, for example, using the same thing now, and then click on, let me cancel this one. And then now, okay, let's say I want to sell short this crypto, 100%, 85k gen, and I click on sell short. Now, this is the work of sell short. If this crypto drops, I'm making profit. Do you understand it now? So let me explain this long and short shortly before I continue with how to avoid being liquidated, because you can be liquidated on short and on long too. Going long means we are betting that the price will go up. When it goes up, we will make profit. Going short means we are betting that the price will go down. When it goes down, we make profit. Here, for example, my entry price was at 0.229 cents, but the current price is at 0.2341 cents. It means I'm betting, and then this red icon here means I'm betting short. If it was green icon, it means I'm betting long. You get my point? It was on green icon, it means I'm betting long. Now you can see that my liquidation price here is at 0.54, 0.45. When you use 1x leverage and open the whole amount, you would have a liquidation price. It means if this crypto rises twice the current price, I'll be liquidated on 1x leverage. Let's click on close and then use the market. I don't like using the market close. I like using the limit order to close. Let's click on close and use the limit order to close. Now, let me explain the difference between this cross and isolate mode. When I click on cross mode, it means all this my $19.43 that is remaining here will be liquidated when I get liquidated. But if I use on an isolated mode here, it means that particular amount I'm using to trade is only what will be liquidated. Let me give you an example. Since it's telling me I cannot be this because unable to adjust isolate margin because of I'm under what we call the multi-asset mode. Click on this click on this three dot here, then click on preference and then click on multi-asset mode. Quickly, let me explain the difference between multi-asset mode and single asset mode. Under the multi-asset mode, even if you have Bitcoin, Ethereum, Theta, BNB, you could use it to trade. But under the single asset mode, you could only use a particular crypto to trade. For example, we have USDT. Here we could only use USDT. And then back to our trade now. Now, click on this cross mode to click on isolate. Now, I currently have 19.43 USDT dollars. To isolate, let's say I just want to trade with $5 only. To isolate that $5, I will set this setting to isolate mode, and then under this isolate mode now, if you look, I could open 83 or 84 worth of this coin. But here now, instead of using the whole capital, I could choose to use only 5 USDT, which is the cost, and it will buy me 22k gen. With this 5 USDT, I could also increase my leverage though. Let's say I go for 1000k gen now, and I click on open this thing as long. The price will not fail now because it's 135. Currently, I'm under the isolate mode of this k gen. And the cost of this is, look now, I'm very close to my liquidation. If ever I get liquidated here, the only amount I'll be losing is this 4.85 USD. You get my point? It means if you minus this 4.85 USD from my remaining 14.58 USD, do you get it? When it comes to isolate mode, it's only that amount, the one you saw as the cost, is what will be liquidated. Do you get it? It's the only thing that could be liquidated. Because of that, you could see that my liquidation is very, very close. If this price ever drops to 0.229457, I'll be liquidated. And my margin ratio here is the percentage. You could see this thing is very close, 74.42. The margin ratio here means how much of this crypto that if you ever lose, you'll be liquidated. Whenever you see this stuff on red, it means you are not safe. You should either add fund by clicking on margin USDT here, this plus sign here, to add. Let's say I want to add additional $1 to this. Once I click on $1, let's say I want to add additional $1, and then click on $1. You will see that it already added $1 to this. Also, alternatively, I can also remove $3. Confirm. Now it's going to tell me insufficient collateral because confirm 3.9 because of the leverage I'm using. I'm buying huge amount of this coin. Look at how interesting it is. $2. On a current going position, you could close a current going position by clicking on, let's say I want to close 50% of this trade. Now I will click on close, slide this stuff here, this amount to 50%. It means I'll be going home with whatever $1 that is here. Automatically now this stuff will be closed and my margin now will be 1.999. If I also still want to remove more of this margin, I could remove it actually. Let's say currently I want to remove one. I can't remove one anymore. That is the let's say I want to remove maximum. Remove. When I remove maximum now, the margin here 1.73, the margin here 1.76 USDT is how much it's costing me to open this trade. Pay attention. If I ever get liquidated in this trade, the only thing I'll be losing is 1.76 USDT, and this my 18.66 USDT here would still be here. Nothing will happen to it. There's nothing to worry about. And remember, once the price drops to 0.2312960, I'll be liquidated automatically. That means at that point I'm already losing. And once you get that stuff now, it's called margin call. When you receive a margin call, it means the price is very close to you being liquidated. Pay attention. It means the price is very close to you being liquidated. I want us to be liquidated here. I want us to be liquidated now so that I could teach you something very valuable. In fact, we are very close to being liquidated. Very, very close. Very close. Pay attention. This is us here. This is our available balance. This, if we get liquidated, the only thing we will lose here is 1.76. See, my 18.66 is still available. That is the work of isolate mode. That is the work of isolated mode. When you are under isolated mode, the only thing that will be liquidated is that cost, which is this one, that it will get you liquidated. But most of the times, many pro traders don't like isolated mode because since you are not adding huge amount to it, little volatility could cause you get liquidated. Now, let me teach you as a pro stuff you could do to avoid liquidation. The very first thing you have to do is click on this leverage, drag it all the way down to 4x. Click on confirm. Never ever increase your leverage more than 4x of your capital. Next, if you want, you go 25%. If you want, you go 50%. If you want, you go 75%, but never ever go 100% of that amount of your leverage. Never. Then remember what I told you. Even if I increase, let's say, let me go back to 1x now. Click on confirm. Let's say, let me go back to 1x and click confirm. Under my 1x with the current price I have, which is 18.66 USDT, I can buy 80k gen at the current market price of I can buy 81k gen at the current market price. 81k gen, always pay attention to that. Even if I increase my leverage to 50x, but I enter 81k gen here, 81k gen, or let's say instead of 81, let's say I enter just 80 or 79k gen here and click on open you look at this point now. Okay, since I'm under the isolate mode, I will still have a liquidation. But for me not to have a liquidation, you must always be under what we call, click on close to close this trade. You must always be on the cross mode. Now, switching over to cross mode, first you switch to cross mode, same 79, this 79, and then click on done. 79, let me just use the current market price, and then click. The leverage is still 50, but the amount I'm buying is just 79k gen, and I click on open at the current market price. Do you see I don't have a liquidation here? Do you see how to switch between isolate and cross margin could give you zero liquidation? When you switch to cross margin, you now have huge amount to trade. When you switch to isolate margin, you are trading with specific isolated coin. And even though I'm under 50x leverage, but since the amount I'm buying is equivalent to 1x leverage, I will never have a liquidation under the long section. If this was under the short section, I will have a liquidation, but the coin has to do 100% increase before I will be liquidated. That is why 1x leverage is the best leverage ever out there. If you want to increase, never pass more than 5x. Now, another way to avoid liquidation is to use what we call the hedge mode. First of all, before we can switch to hedge mode, you have to close any open trade and click on confirm to close. Now, whenever you close a trade, even if you're on profit, since you are using the market price, you would always lose money. For example, I closed using 18.64. My variable balance was 18.64 USDT, but now it's just 18.60. Click on these three dots here, click on preference. Then we're under what we call the one-way mode. Under the one-way mode, you can't buy short and long simultaneously. For example, using the market order here, let's do this very quickly, and I want to buy 50 of this coin, and I click on open long. Simple. I have a trade going on, but if I want to open short, let's say the market is going against me and I want to open short again now, sharp, quickly, 50 USDT done. I'm trying to open short, to click on sell short. Now once you click on sell short, it will automatically close this trade. That is what we call one-way mode. Under the preference now, click on one-way mode, change it to hedge mode. Now with this hedge mode, I can open long and short simultaneously. Then unit preference here is people. When you use USDT here, you'll be seeing your coins, your values under USDT is very bad. For example, instead of knowing that you bought 10k gen, you will now know you bought 20,000 worth of kgen. No, in USDT, no, you leave it in that coin input. It's very easy to calculate. Put on the price protection on. You could also use the notification if you like notification. All these stuffs, you could go around these stuffs and find, but this is the most important thing: the hedge mode and then the single asset mode. Multi-asset mode. Now, currently we have this stuff using the same market order. Let's try to enter the let's say let's go on with 0.23135. Now choosing this hedge mode, 50 worth of kgen, 50 kgen, click on open long. Automatically you'll have 50 kgen going on here. Now another 50 kgen, click on open long. Automatically now we have a short and a long trade going on. For me to be liquidated with this my $20, now this kgen has to get to $12.38. Isn't that huge? Kgen is currently not even up to $1, not even up to half of $1. It means it might take a generation for them to get me liquidated. And then look at the tricks here. If I'm making $1 here, I'm losing $1 here. If I'm losing $1 here, I'm making $1 here. That is the essence of hedge mode. I will explain hedge mode fully in a different tutorial that is different from this. For now, let's forget about hedge mode and focus on other stuffs. So that is one of the things, the ways not to get liquidated. Actually, click on close all position to close all the hedge modes automatically. We have what we call market close and what we have called P&L close. Market close here means you are closing with the current market price. P&L close here means you are closing based on profit or loss at a particular point. I want to close everything, so I'll click on market close. It's not always good to use the market close because you might think you're making profit, but you're not be market. Next, which is the last thing, okay, not the last, I'll be teaching you how to set a take profit and stop loss using the feature. To set a take profit and stop loss on futures is very easy. You could do that before opening a trade or when a trade is already open. Let's take this trade long, for example, using the current market price, and I want to open 80k gen. To set a stop loss now and take profit, all I have to do is click on TPLSL. Tick on this. Once you tick on it, you will see the stuff. Take profit here means if you want to sell at the current price where you're already making profit. Stop loss means if you don't want to lose. The reason why I got liquidated earlier is because I didn't set my stop loss. Had it been I set my stop loss earlier, I would have not been liquidated. In that video you saw the liquidation. So now take profit. Let's say we buy at the current market price of 0.233 and I want to sell when the price gets to 0.45. At that point, if I buy now and take my profit at that 0.4 price, my profit then will be $17. And then here now I could choose to enter my stop loss at 0.2. It means I'll be losing $2 there. Another way you could see this take profit is to click on this advanced mode. Once you click on this advanced mode, it will help you to initialize everything. If you are opening long, let's say I'm opening this trade long. This is my take profit at 0.45 USDT. But when it gets to that point, using the current leverage, I'll be making 17.34 USDT. But if it drops to this price at 0.2, it means I'll be losing only 2.65 USDT. It's always important to set your take profit and stop loss. Had it been I set my take profit, I would not have lost that $20. Because even though I was making class, this is the essence of me making the class. Even though I was making a tutorial, this is the essence of you learning from my own mistake. So click on confirm. Once you click on it and then click on open long. Now, I have a trade that is open and I also have a stop loss and a take profit that is open, that is under the open. I have a trade that is going on, a position that is going on, and I have an open long and open short. And now I have an position going on. Also, these two trade here means the stop market here. Remember what I told you guys, I will explain the stop market. Like the stop market here means the stop loss, and the take profit here is usually the limit order or the take profit market. It means that if my price gets to 0.45 USD, the market will automatically close. Same with the take profit. When one closes, the other one will automatically close. It means if this price ever drops below that particular amount, I will never lose. Now, this is how to set a take profit and stop loss before opening a position. Next, I can now show you how to take a profit and loss when a position is ongoing. Remember what I said? Under the hedge mode, we can open both long and short simultaneously. Here now, okay, my leverage is 50x. I will want to open, without using the stop loss now, we want to open 80 kgen again and click on open short using the market order. Now, this is my short and my short is open. How do I now set the stop loss since the trade is already open? You can see I only have to set a stop loss here with a trade that is already ongoing. Click on TPSL. Now choose the value. Just enter the value. There are two ways to do this. You could either choose to enter this using the TPSL or you go for the position TPL, where, for example, let's say I want to, instead of calculating, let's say I just want to make $15 out of this trade. All I have to do is enter $15. It will automatically set, if I enter $15 here now, it will automatically set the value at which the take profit value will be calculated, which is if the price goes up to 0.0419. Since I'm under short now, if the price drops from this 0.228 to 0.0419, that is when I will make a $15. If the price ever rises to, let's say I put $2 here, it means if the price ever rises to 0.25448, that is when I will be forced to close based on stop loss. That means I don't want to lose more than 2 USDT here. Now if I click on confirm, automatically I have set a stop loss and take profit simultaneously for this trade. The last thing I will be teaching you guys now is how to scale in an order. When you look at signals like this from different groups, let's look for a signal. Close all position, market close, everything will be closed. This is $50. Let's scroll down to discovery. Told someone to short and then he's already losing. Fear crypto. Crypto is not just the way people make it look like. Let's get back to one of the groups I am in. I think my signal group. So when you look at this my signal group, signal that was dropped on Tuesday, I said something like short ZEC USDT, entry 147 to 144, target 135, stop loss 149. Good. How do you take trades like this? To take a trade like this, very easy. Short ZEC USDT, entry 147 to 144. If you are new to trade, you might start taking trade 147, 145. No, that is not how we do it. Let me go back to this feature. Let's change from KGen to ZEC. As of the time this trade was given, this is not the price of ZEC. As of the time when the signal was given, ZEC was not on this price. Now you are told to short ZEC. Let's say you are being told to short the same ZEC now, and you are told to short from 239 to 231, 239 to 231. To do that, we use what we call the scaled order. Click here, click on scaled order. Good. There are different ways to scale an order. A flat position here means if you are buying $2 of worth of this crypto, you buy that $2, maybe the so amount. Then the rising position here means as the crypto is rising, the more of that crypto you buy. Then the falling position is here is as the crypto is dropping, the more of that you are buying. Then random here means you are buying at a random interval. Since we are going for future, we will prefer as the crypto is rising, the more of that crypto will be buying. Now, once we click on this, we could now scale an order. Good. Let's begin. The lower price here means the lowest we want to buy. Let's say here now, the lowest I want to buy is $232. The current market price is $231. The upper price I want to buy was let's set up 240. 240. That is the upper price. Remember that. And the size of ZEC I want to buy, using my current leverage, actually, before, the problem with scaled order is that you wouldn't know how much of this coin you could buy. Do you get the problem now? So for us to know how much of this coin we could buy, we need to switch to, first of all, we need to switch to limit order or market order, and then change this, put this leverage. Now if you see with our current leverage, we could buy 1.5 ZEC. With 1x leverage, we could buy only 0.078 ZEC. With maybe our normal agreed leverage, which is we could buy only 0.314 ZEC. Do you get it? 0.314 ZEC. Now heading back with 20x leverage, let's use 20 just for the sake of this class. Heading back to 20x leverage. Don't go beyond 4, but I'm using 20 so it will be easy for you guys to understand what I'm trying to explain. We could actually buy 1.406 ZEC. 1.4. I just want to buy only 1 ZEC. That is why I'm on 20x leverage. Now switch back to what is called a scaled order. Remember our former entry was lower price is 234, but now I would like to increase this to 2334, and then the size of ZEC we want to buy is 1. The order count here means how many times do we want to buy this coin. There's 2 to 50. Here now, I always like using 5. When I use this 5 now on this increasing order, look at what it means here now. At 24, I'll be buying 0.0. That means my order will be scaled in 5 times. If I enter 10 here, for this quantity, it's very little. So I should go for like maybe 8. If I preview here, you see now I have 1, 2, 3, 4, 5, 6, 7, 8. So let's stick to 5 for now, since we are not buying a lot. With this 5 now, if I click on this preview, let me do something that will be easy for us to say it immediately. If I click on this preview, remember what I'm using. I'm using the increasing order. This one is called it the increasing. That means if this ZEC price is rising, as the price of the ZEC is rising from 233 USDT, the more of that coin I'll be buying. For example, my first purchase, I will only buy 0.066 ZEC, 0.133, 0.2, 0.26, 0.3. So 0.3 is greater than 0.06. The reason why we do this is because the loss you'll be incurring at that moment is very little compared to had it been you bought from 0.33. So the higher the price is going up, the more the price is going up, the more you would want to buy, so that it will shift your entry price. Let me show you that what I'm trying to explain now. 0.33 and then 0. Let's use our lowest point to be the current market price. I want to use the current market price as my lowest point. 0.31 point. 0.32. When I click on open, no, not long. Let's say when I click on open short now, my 5 orders are already here waiting. Now, since this market has gotten to 0.232, the first trade is already open and is a short. Currently, you could see that my liquidation here is at 504. So the more this trade is opening, the more of this trade that is opening, the more my liquidation will be getting smaller and smaller. That means I'll be getting close to being liquidated. See, this is the reason why we do always place the first buy as small as possible. Here now you can see I'm making insignificant profit of loss, but I'm expecting this crypto. The reason why I'm using this scale order is because I'm expecting this crypto to come back. So that is how we use this kind of entry price, blah, 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 target, blah, 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 stop loss, blah, blah, blah. Do you now get it? Entry price this. Now with this trade that is ongoing, I could actually set my take profit and stop loss. So don't make the mistake you can't set your take profit and stop loss. I could actually set my take profit and stop loss. I like PN position. I could always go for stop loss, since usually it's not good to set stop loss here until the flash price has entered, especially if you use 4x leverage. Here now I could put my stop loss at 244. Look at how crazy it is. At 244, click on this too. At 244, I'm only losing 0.79 cents, not even up to $1. Click on confirm. Do you get why we scale in order? Because you can't calculate how much volatility or how much volatile a crypto is. That is why we scale in an order. So with this now, I already set my stop loss for this crypto. So that is how to trade the futures and the basic things you need to know on futures. Another thing you need to know on futures is I have not traded futures, but when you go to the asset mode and you go to the futures, now these are the values you already have. Today's PNL, these are the part many crypto traders will never show you because they are scared of telling you how much they have lost. This is the last part of the crypto. The margin balance here means I have 18.11 USDT currently. If you are making profit, this margin balance will be increasing. If you are losing, this margin balance will be dropping. That is simple as that. Today's last PNL means I've lost $21 today, meaning that day when I was making the video, I actually got liquidated. Trying to show you guys how your life would be without a stop loss and how your life will be if you don't have a stop loss and you're trading a cross mode. That was where I get. Then my current wallet balance is what you are seeing. My unrealized PNL here, it means unrealized PNL, because I have not closed it, it means this profit can either go profit or loss. If you don't close this stuff, it will never be added to your margin balance. Now history here, this is where we go for history. Click on this today's PNL here, you will see your history. In the last 1 month, I've lost only 21 USDT. Forget about the 30 days percentage here. This one is, they just exaggerate it. You see 100 minus 1,627 points. This is compared to the leverage I use. In the last 3 months, I only lost $21. In the last 1 year, I only lost $21. You see now total profit I've made is 0. Total loss you have made is 21.71 USDT. My net profit or loss here is negative 21.7. So the net profit is when they deduct your profit and your loss, you will get what you call the net profit. And this loss I made is when I was trying to trade this future. So this is how to understand the future analysis, PNL analysis part. Whenever somebody tells you they're a profitable trader, always ask them to show you their futures PN analysis. It's very important. So back to 7 days, we only lost back to these 7 days. You will see that the only loss we got here is the one we had for when I was making this video, which is today. It's the one we had from this trade today. So currently you see I'm losing because this coin, remember, okay, now the second good. Before I could finish this analysis, the second trade has been filled, meaning I only have 3 now left. Since the second trade has been filled, you could see that my liquidation has moved from what? My liquidation has moved from $500 to $322. And then before, my entry price was at 31. If you look now, my entry price is now at 33 because I added an order that added at a different time. And this stuff here now is the current market price. So for me to get liquidated, this is how the scared order work. So the more the price goes up, the more of a crypto you could buy. Don't forget, you would always be able to set the stop loss and take profit. So with this, we come to the end of our tutorial today. Thank you guys. If you find this very useful, don't forget to subscribe. So this is exactly how the scared order works. Look now, had it been our entry then was 231, and then currently the current market price is 245. Had it been we entered that whole trade at 231, we'll be losing approximately close to $16. But since we scared in our trade, instead of losing $16 or $17 now, we're already losing $9. You get it? That is how scared order helps you to avoid losses. Now there are 2 things you could do here. Since you're already losing, you could try to hedge. You don't need to, or you could just wait for the trade to come down or state your stop loss. We are currently in a very volatile state of every crypto, because we are in the weekends, and weekends are when the traders usually go for the final push before the next dump next week. In case you don't know, this is a trick.